Welcome to another Wisdom podcast, the second of the year. Happy New Year to everyone. We have Nicholas Abraham with us today. He's Senior Director of Investor Relation at QC Capital. He's raised millions. He's into car washes and multifamily 506 C private equity opportunities. Very well-rounded guy. He's young, just like myself, very ambitious, and I think Nick has an interesting background to share with us that was really much educated and entertained last time we spoke. So, Nick, welcome to the pod. Tell me a bit more about yourself and about what you're up to nowadays.
Yeah, thanks so much for having me on, Charles. So just a little bit about me. I'm a institutionally trained economics and finance background, worked for some Fortune 500s, got out of the Fortune 500 industry and went into startups, had some great success there, and then eventually moved into real estate where I now raise capital for a firm called QC Capital. We're a private equity group that focuses on acquiring multifamily, primarily plus 100 unit kind of stuff, and car washes now. We've pivoted into car washes recently, much higher cash flows as the interest rate environment's gotten much higher over the last year or so.
Tell me about your background, because yeah, you did something quite special. You risked even some of your own money at some point. You were CFO of was it a solar company or like a manufacturing company you told me? And that was quite the adventure, was it?
Yeah, I can kind of dive in a little bit more about that. So after I left Fortune 500s, kind of corporate America, that was still in college, I graduated and joined a startup solar company that was about 3 months old. And being from Fortune 500, I'm used to, systems and processes, revenue forecasting, all this kind of stuff you're used to seeing when you work for a top tier institution. And, and when you go into startup, a lot of people don't have that. And so quickly became a top sales rep at the company with no sales experience, just something that I naturally kind of found in myself that first week out in the field, and continued to do that for a few months, developed out, those SOPs, that business plan, kind of revenue forecasting, all the stuff you would expect to see in a Fortune 500 in my spare time. And about 3 months in, I came to the owner, said, "Hey, I'd love to pitch you on this idea, how we can, really take the company to the next level." And we went out, we went over the PowerPoint presentation I had made up, and he at the end of the presentation said, "Nick, I love it. Let's implement it today." And so, long story short, within 30 days, we ended up tripling sales. By the end of the year, he was projected to do maybe 250,000, roughly maybe 500,000, somewhere in that range. Well, we ended up hitting about 14.5 million in revenue. And so I ended up taking a lot of our contracts that we had sold with customers that hadn't been installed yet, because we were just selling at the time, and I went in what's called invoice factoring. So I could basically leverage the receivables I would get from installing these jobs and having them completed and take that cash now today. And so I ended up doing that for about $250,000. I internalized the installation process. So rather than us just selling and handing it off to an installation company, we hired our own crew and started doing that model for sales and installs. That more than doubled our bottom line in terms of net operating income for the business. And from there, we just started getting really vertically integrated, started negotiating those bulk lines of credit with the distribution companies, started working down our dealer fees on the financing side, and really just kind of tightening and fine tuning, the nuts and bolts of the, Ferrari, so to speak, that we had built. But by the end of it, we had about a little over 2,000 sales reps out in the field in about 10 different states. And this was back during, 2016, 2017, 2018. So this is right when like Solar City was really struggling, and, Elon Musk was buying them because their sales were pretty bad. And we were basically just dominating Central Florida, which is where we were headquartered, but then starting to expand this model out into different states, when eventually a hurricane came through in 2018 and delayed installs for up to over a year for most customers. And we end up shutting the doors down because of that. And that's how I end up finding real estate, something a little bit more durable and sturdy of an industry. There's been some real estate professionals here for a few hundred years, whereas solar's really only been around since the 70s and really only retail since the 80s and 90s. Even stint, still, it was a pretty high ticket product for a very unique client. It's really opened up now, but yeah, I was very early in that industry and was able to make some waves before I got out.
Would you describe yourself as more conservative now?
I think, you go to school, you go to university, and they teach you all the theories and out of the books, right? And I remember spending like a whole semester trying to understand in accounting debits and credits. And it was such like a huge thing to the accounting professor. But then when I got in real business, that was never really a thing. That's not really something that you would do. You leave that to your, tax professional who's going to file all that kind of stuff. And you start to really realize what's important, like things like cash flow. And so to answer your question, I think through that experience, I really found that, again, coming out of college and working for established companies, not everything that glitters is gold, right? And you really have to stay really focused on what you're trying to achieve and stop trying to say, oh, I can make money here and oh, I can do money there. And there's tons of different opportunities, right? Whether it was e-commerce coming out or Facebook affiliate marketing. But yeah, I mean, now I feel as though I'm a little bit more conservative with my resources in terms of time, what I'm really spending my time on and what I can really achieve, kind of given the goal. So in those kind of terms, yeah, I would feel that I'm a little bit more conservative, but my investing style is very much aggressive, right? I'm a young guy just like yourself. If we lose, you know, some money here, some money there, is it really going to stop us from retiring? Probably not. But if you don't take those chances, there's a definite guarantee you're going to work a 9 to 5 for the next 40 years. And that really isn't in my plan. So in those types of terms, I'm a lot more aggressive than the average person.
Right. Yeah, sometimes I hear these people and they're like, yeah, providing for my family and I don't want to put my family at risk, and even when I'll have children, I think I'll be a big risk taker. Even if I face financial ruin, isn't there some value for my children's to learn off that? How many children's are yeah, human beings became billionaire because their dad was broke. I don't think it'll ever be my case, just because I'm too good at this, but I think they can learn from hard times. And I think it's an excuse that a lot of people think, and it's really primal, this instinct that, oh, I'm not going to take big risks now because I'm putting everyone at risk. And poor little Johnny, he won't have food, and my wife, but they're all strong. They're all very powerful and um, adaptive human beings. What is your take on that?
Yeah, I mean, it definitely gets harder and harder and harder to take more risk the more stabilized you become in life, right? At this point, I only have a wife and 2 dogs. I don't have kids. And one of the primary things that we do are live in flips, right? So this is a 3,300 square foot house I bought a year and a half ago. I stay in a house for every 2 years and sell it tax free. And I wouldn't say necessarily like if I had a child, I wouldn't be doing this, but it would definitely be a lot harder. When I moved into this house, this office was our bedroom. I just recently moved out of this bedroom to make it my office, which is the actual office downstairs, because we spent 3 months in the apartment and renovating this place, demoing it, got the first floor put together, moved into it, and then the second floor was completely unfinished. So, it took us about 6 months to get everything upstairs put together. And then we were able to kind of, again, move up there just recently, but it's definitely hard. I mean, and again, the older you get, the more tired I become, the less I want to do the work on the house. And so, now that I've kind of done this a few times, I'm now making the transition away from wealth accumulation and going more into wealth management, right? How do I get, again, a young part of our life is spent trying to accumulate the money, and most people spend 40 years out of 9 to 5 trying to do that. I've kind of hacked the system using these live and flips, selling them tax free, So now I have all this cash that I've accumulated, and now I'm looking to deploy it back out into the world to have it work for me. So I don't always have to work for my money. And so I'm now transitioning into a point where I'm becoming less hands-on in the things that I do. And I'm now trying to make my money work for me that I've spent, the last decade trying to accumulate.
I'm focused on optimizing my money making skills. I mean, I want to become a trillionaire, like I don't think there was ever a lot of wealth managers. I mean, would Charlie Munger and Buffett be wealth managers, quote unquote? Because my plan is just to become very, very good at making the money and outsourcing wealth management to a human, phase one, but then I'll get quickly tired of that and I'll outsource it to a bot. What do you think of that?
Yeah. Um, I mean, I love, and Charlie just died. So rip to Charlie, rest in peace, my guy. And Warren, they are, I don't know if you've ever studied Warren Buffett, he started making his money very early through a newspaper route, selling Coca-Cola. It's just some of these odd and end things until he had enough money he could start to he bought a business, which was a textile company. And from there, he took all the profits out of that company and started putting it into different companies, right? So, he very quickly became more wealth management than wealth accumulation, kind of through that strategy. And I learned from Benjamin Graham, which was, Warren's mentor when he was learning all the stuff that he was learning. And so that was a book called The Little Green Book of Value Investing. And a lot of my investments are very fundamental. I try to be a little bit more conservative, relative to what I do, but I might go all in. So like Apple stock, for example, the majority of my profile or portfolio is an Apple stock because I tend to do a lot of trading in it. There's enough volume in that stock, but there's also a lot of security in it too. You look at the S&P 500 from this year, it really didn't do that good unless you're in Microsoft, Amazon, Apple, Facebook, and some, Tesla, some of these high-end tech companies. And again, over the last decade, what led the majority of value for the S&P 500? It was these tech companies, specifically Apple. And so if you were in Apple over the last decade, you did really well relative to some of the other stuff. But, wealth management, there's a couple different ways to go about it. It could be defined maybe a few different ways. But at the end of the day, you have to learn at some point how to manage your wealth, because if not, you'll end up spending your entire life working for it.
I love working though.
I love working too, but at some point, I'm sure you would like to. Well, I mean, you have a child, right? One kid,
No, 4 dogs. We're about
four
to
dogs.
have children soon. Yeah.
Okay, but with children, right? Like you have a huge expense coming up 18 years from when you have them, right? Or maybe a little bit sooner, 17 years when they go off to college. And so if they end up going to a nicer university, that's, I mean, 40 to $60,000 for the first year just for your gen eds, right? So I mean, it gets very, very expensive when you start having children, especially for us younger guys, where the cost of living is so much more. It's a little ridiculous, but I mean, I love working too, and I'm really good. Like you said, you want to really fine tune your money making skills, and that's kind of what I've been. My mission over the last 10 years is to get really good at communicating, raising capital, working in real estate, and really just that sales mindset, right? Of at the level that I work at, I'm competing against Blackstone. I'm competing against Bank of America. I'm competing against other top syndicators in the United States. So the realm I work in and the investor base that I call upon, these are, I'm competing against the top people in the world, so to speak. I'm not just selling an e-commerce product where I have to put up a web page, or, maybe a coaching call where I have to, sell a $2,000 or $6,000 product. I'm raising, $50,000 minimum. Most of the investing partners are coming in for a couple $100,000, or, maybe $1 million or more. So the level of sophistication you have to have those types of conversations, that was a result of me putting in the hard work to really find and fine tune those sales skills. Like you said, the earning capacity, because you always want the money coming in, but you also need it to be managed too, right?
Right. For the school, like I'm odd. I question pretty much everything as a contrarian, and I'm gonna start my own school and very, very entrepreneurial. So that
Mhm.
kind of differentiates me from the typical investor. But the question I have for you is something that I question often myself, which is that people will think of maximizing their wealth and stacking up that cash before actually stacking up their health accounts. They will not invest in their health. They will be 30 and have a biological age of 45. They will look like shit. They will feel like shit. They will think like shit. They won't be in shape. Um, and some of them might die from a heart attack at 75 instead of living 140. And every year that you live extra, you can, I mean, if you're a good earner, you can make 1 million extra per year. So theoretically, you'd be missing on 75 million or something like that if you die before your time. What do you think on investing in your health and the impact that it can have on your wallet at the end of the day?
Oh, 100%. And one of the top business coaches that I listen to, he said it this way. He said, "Your body, your physical health will drive your mental health, and your mental health will drive your business health." Right. And so it all starts with, just like we were talking before we started the podcast, getting up in the morning, getting that sunlight in your eyes and walking around to get you in motion and get that day started. It's all starting with the body. It all starts with the physical, doing the things that you need to do, whether it's drinking salt water in the morning with some lemon and kaya pepper, whatever it's called. There's a lot of things that will drive your mental health from your physical health. And so I think physical health is absolutely very, very important. You can't be and I'll take it a step further. I would say one of the worst things you can do is just be stressed all the time. Stress takes so many years off your life, and so many business owners, I know I'm personally guilty of this too, is being stressed about things that don't really need to be stressed about, or just having all this residual stress and not being able to release it after the day of work. So you have to have those subroutines programmed in your day, so to speak, when you're done. And we find this through other means too, right? Like whether it's just like I work from home, and my wife, she's a tutor, so she's in and out of the house all the time. And just because she's not in a session working with a student, and she comes home and I'm sitting here in the office, maybe not on a phone call, with an investor at the moment, but she, will think it's okay to come in and talk to me. And I'm like, no, this is my time. I'm in the office. This is this space holds my energy, and this energy in this office is work, right? And so when I leave the office, it becomes a different conversation between me and her. Whereas if she comes into my office, it's like, hey, what do you need, what's up, very quickly in, out, because I want to stay hyper focused and keep the energy that I've accumulated and manifested to be productive in this space. So there's other things too that even go into beyond mental health, but also just trying to put those safeguards in place, right? Because I don't want to act like a salesperson to my wife, right? When I leave this office and hang out with her and go out on a date, that's not fun. And so I really have to harness where my skills come out in the places that I'm at, so that I can still, connect with my wife and be personable and all those types of things. Like I'd like to be, right? If not, I have a lot of stress and I tend to be a little bit more, uh, frantic and overwhelmed if I don't do that. So everyone's different though, right?
And how do you transition from one mindset to the other? And how do you give less fucks, for lack of a better word?
Yeah, yeah. So a lot of it's the space that I'm in. If I'm in the space, I've trained my mind that I'm able to care about those things in this space. But if I'm outside of that space, I've left for the day. I'm outside of the office, right? And there's nothing that I can do to basically help that. And so the way I break up those periods, or um, attitudes is essentially a break in between, right? So it could be as simple as, we're young guys. It could be as simple as playing a video game. It could be as simple as making a phone call to maybe one of my family members, taking a walk after I leave the office, before I come back into the house and go into the kitchen and hang out with my wife. I might go outside and just separate the spaces with something in between. So I don't just walk out of my office here and into the kitchen and have that same mentality. I might go outside first and walk a block and then come back in and give me that separation, that decompression of the day, so to speak.
So what are your top goals for this year?
Top goals for this year. Shoot. Yeah, 2024 is here. We're the second day, aren't we? My goals, it's weird because most people do yearly goals, whereas I'm more like looking at myself 5 years down the road. What does Nick look like in 5 years from now? Because that's my mentor. That's what I'm chasing. And so typically and most people aren't like this, but I have a really good sense of delayed gratification, right? I can wait 5 years. I can wait 2 years to flip a house before I make any money, right? Most people do their goals kind of year by year. There are some the short term kind of stuff. Like this year, there's a couple things on track. Like we'll be selling the house. We hit the 2 years in July, so I'm tracking that. I want to make sure I'm maximizing the house when we sell it. Come up this year. And with that, there's a couple other things I'd like to do. Like I mentioned before, with the wealth management, I'm making that transition. And so part of selling the house will be, a substantial amount of capital I can place into a deal. And again, being in private equity, I qualify to be an accredited investor because I'm a knowledgeable employee of the firm. So I'm actually eligible to invest into deals I otherwise wouldn't be able to invest in to get some of these returns. So, if I put $500,000 into a car wash opportunity, I'm going to get 15% a year, which ends up being a little over $6,000 a month in cash flow, right? And that would, be life-changing for a lot of people. So if I could, essentially get the liquidity out of this house this year, invest it into an opportunity that's going to pay me more than what my W-2 pays me, and I still have my W-2 coming in, that's kind of where I'm trying to get at this year, from a financial aspect. My wife and I, we have separate goals, right? Like outside of business, she has a tutoring business she started last year. And that's been going really well. So I help her with a lot of her stuff. And that's kind of like our financial goals. And then we have our personal goals. A lot of that is really about the mental health, right? Just trying to, I come from equities, right? And equity trading tends to be it's very cold. There's not a lot of emotion in it. It's very calculated because you can't really have room for error. And I've done that since, being a freshman in high school, right? So ninth grade, which was 2008, is when I started doing that. I tend to be a lot more black and white, so to speak. And I'm trying to personally, grow and be a little bit more in tune with my feelings and be able to control them a little bit more and have those tools in my tool belt to handle certain situations when they arise, right? And be able to, you know, it, a low mental IQ status is if I have a bad day, I'm going to end up having a bad week or a bad month. Whereas if you're a high status person, if you have a bad 15 minutes, it might only be a bad hour for you, right? And so the difference between a high caliber person and a low caliber person is how fast you can bounce back from that happening. And so a lot of that is what I'm trying to focus on. Like I said, a lot of your business is driven by your mental. A lot of your mental is driven by your physical. I got myself physically fit in 2023 again after a shoulder injury. So I'm back on that track. And now I'm trying to, even do more still with my mental as that next check, I think.
Love it, dude. Well, thanks for coming on today. Where can people find out more about you, Nick?
Yeah, LinkedIn, Nicholas Abraham. I'm the senior director at QC Capital. So you can look up the firm QC Capital, or you can find me on LinkedIn there. I also have a Instagram, Nick Abraham. And that's, my Instagram is more of me flipping the house, my wife and I, more of the personal stuff. But if you're more interested on the professional side, LinkedIn is the best way to reach me.